Welcome to another market update for the Las Vegas Valley's residential housing market, specifically for single-family residential resale here in the Las Vegas Valley. I am Justin Miller with the Chong Group, and let's go ahead and dive right into the numbers this month. So as I record this, it is May 8th. And the data were pulled on May 7th, as I try to do every month, pull the data on the 7th. That allows us to make sure that we have a consistent picture of what the database looks like, and that the database has been generally completely updated for the transactions from the month prior. So this video is the May update, but that means that we're looking at the April data for 2023, and we're making comparisons back to March of 2023 for that month-on-month comparison, and we're making comparisons year over year, April 2022 through April 2023. All right, with that introductory note, let's go ahead and jump right into the numbers. First, pricing. How did pricing do in Las Vegas in April of 2023? Not bad. Pricing, $425,000 was the median sale price for the month of April. Now that's up $5,000 from the $420,000 median that we had hit in March of 2023. That is up 1.2%. And by the way, if we annualize that gain, we were up 1.2% in March, we were up 1.2% in April. If we continued that throughout the year, that means we'd be up almost 15% across the entire year. This is actually a strong growth rate in pricing. So don't be fooled by it's only $5,000 or it's only up 1.2%. This is actually a strong rate for the increase in pricing. Does it match what we were doing in 2022, in the first half of 2022? Or what we were seeing in 2021? No, we've slowed from that. But remember, in the first half of 2022 and throughout 2021, even in the second half of 2020, people were complaining prices are going up too fast. There is no ability to actually be buying property. So we don't want prices going up super quickly. This is actually a pretty significant rate of appreciation. And it'd be great if we were able to stay at this for the entire year. We may slow a little bit, we may increase a little bit. We'll see how the year evolves. I think prices are actually going to start going up a little bit more quickly, assuming Congress manages to get around the debt ceiling and there's a solution to that. If the debt ceiling is breached, then we have a different problem. And again, go back and look at my risk to forecast video for 2023 that I released I believe I released that in December of 2022. Okay, so what about the annual price change? Now remember, second half of 2022, we saw prices coming down. We saw them coming down in total about 13% from the peak at $480,000 in May. So this month last year. But in April of last year, we were at $475,000. So we've come down $50,000 or 10.5% from that number that we had achieved in April last year. And remember, that was where we were accelerating a little quickly. Through April, we got to go a little bit higher in May last year, and then we started to come down. So the numbers for March, April, May last year were considerably inflated from what we might otherwise have expected. But that's where we stand. We're down 10.5% for the year. That's not bad. Remember, everybody had been talking, and by everybody, I mean almost everyone that you would listen to on YouTube, almost everybody that you would read in the newspapers, they were talking about how prices were plummeting. Prices never plummeted, and we're down 10.5% year over year. And we've been coming up over the past couple of months on single family homes. So we're at 425 right now. All right, there's a second way that I look at pricing. As you know, if you've been watching these videos, and by the way, if you've not been watching these videos, please subscribe. These are highly analytical, very detailed, a lot of information about what's going on in the market here in Las Vegas. and smash the like button. That way I know that people are appreciating these videos and it encourages me to produce more. So the second way I look at pricing is the price per foot, the median price per foot for a sold home here in the Las Vegas Valley. That number in April was $236 per foot. That was up 0.1% from the $234 per foot for March. So on median sale price, we came up 1.2%. On median price per foot, we came up 0.1%. Now, year over year, price per foot, $236, we're down 8.5% from the $258 per foot for for April of 2022. So we came down 8.5% on price per foot, down 10.5% on median sale price. What this suggests is we're actually seeing pressure on both ends of the market, and what's happening is we're getting more sales in the middle strata of the market, sort of that middle 50%, with a little bit of slowdown in the top 25% and the bottom 25% of the market in terms of pricing strata. And so that's in some manner, that's very encouraging that the middle of the market is recovering here nicely at this time. We're not seeing a lot of movement into the tails, the higher or lower parts of the distribution. If the middle of the market was suffering and the tails were doing well, I would be a little concerned, but this is actually really good news. The middle of the market is where we're showing strength. And that's suggesting something about availability for financing. That's suggesting something about the way in which transactions are occurring. So that's actually good news. And that's why I use this second pricing indicator to kind of give us insight into what's happening within the distribution of sales that are taking place in the market. Okay, so that's what's going on for price. But what about volume? Remember last year in the second half of 2022, volume was plummeting, and we actually were getting down to multi-decade lows for transaction volume. So that showed some real weakness in the marketplace. The marketplace there were transactions occurring, but they were really slow and the number of transactions was really low. So how are we looking here as we get through the first month of spring of 2023? Well, not bad. We had 1,778 completed transactions, sold transactions for single family residential in the Las Vegas Valley. Now that is down. It's down from a little bump, a great big bump that we had in March of 2023. We are actually down 17.5% from the 2154 sold in March. Now, that level of decrease in volume might be a little concerning, except for two things. One, we saw a great big bounce in March. And so we would always expect a little bit of a return to the mean. As standard statistical property, when you get big variations, you expect to correct the next month some portion of that large variation. So if we get a great big jump, the next month we're usually going to come down a little bit. The other reason is because we actually have some additional data, which I'll look at in a couple minutes, that indicate what might be going on into the future. So because of those two reasons, even though we're down 17.5% from the prior month, I'm not concerned about that. If we see a continuation of this, then I would start to become concerned that we've got problems in the marketplace. I would attribute this drawdown both to a return to the mean, but I also would attribute this to some level of uncertainty in the marketplace, specifically around what's going on with regard to the debt ceiling. Again, Congress has to pass an increase to the debt ceiling or a suspension of the debt ceiling. Otherwise, we risk catastrophic failure of the U.S. economy because the government effectively closes down, and the full faith and credit behind the US dollar and treasury bonds simply would collapse. So hopefully we get past that. I think the probability of us getting past that is high and increasing. I've been quite concerned and raised this issue multiple months ago and have mentioned it every single month since. But I think there's some reasons for optimism right now about how the debt crisis is going to be resolved. And specifically, a debt ceiling crisis. It's not a crisis of the amount of debt that the U.S. government has. Now, we are down also year over year. Remember that in the spring of last year, sales were still quite strong. We did not see peaking in activity in the market until after the end of May last year. So as of the end of April last year, we had 2,933 closed transactions, and we're down 39.4% from that. Once we get into the July data, the August data, the year-over-year comparisons are going to start to become much easier because we started to see dislocation in the market last year in the summer timeframe. But right now we're still looking at hard year-over-year comparisons because we were looking at the very top of the market at this time last year. But I say there's a second reason why I'm not concerned about the reduction in transactions in April, and that is because other statistics help us look forward in time. They are statistics that have occurred about things in the past, but they look forward, and that is specifically pending home sales. That's contracts that have been written, they have not yet closed. So we expect most of those contracts that have been written to close in forward months. So looking forward in time. Well, pending home sales contracts that were written were 2,200 in April of 2023 for resale residential single family in the Las Vegas Valley. So that's actually a really good number. In fact, that number is up from what we saw in March, where we also saw a really strong pending home sales number. We're up 6.3% from the 2,069 that we saw pending at the end of March. So that's really good. Now, I will comment that at the end of March, at the April update video, when we were looking at the March data, I had commented I expected home sales, the actual closings, to increase in April because pendings had gone so high in March. So that didn't happen. Sometimes we get a shift of a couple days in where a statistic gets recorded, right? If something closed on May 1st instead of April 30th, that means that that's going to be recorded into the May data instead of the April data. So sometimes those pending home sales slip a couple days onto one side of a month change, and that can have an impact. That may be what took place here, because we saw this big bump in pendings in March, and we're still up even higher for pendings in April. So that suggests actually that those pendings that did not close, some of them have just simply shifted. They're still pendings as we entered into the month of May. So I think that May is actually going to have a pretty strong sales number. We are down from the number of pendings in April of 2022. We're down 21.6% to 2,000 from 2,787 to that 2,200 level. By the way, that was the highest number of pendings that we saw in any month in 2022. And so, again, we would expect to be relatively weak from that. Next month, we're going to start to see pendings from last year, that year-over-year comparison, start to change a lot because we started to see pending home sales come down kind of significantly May and then certainly all of the subsequent months of last year. Okay, so then really important information is about inventory, because remember, a house doesn't sell unless it's sitting in inventory, with very rare exception. So a house sitting in inventory is a seller has declared, hey, I've got a house, I want to sell it, I'm having it listed, and so it's available for sale. So that allows a buyer to come along and make an offer on that house. See the house, make an offer on it. So we need inventory. And I've been talking the last multiple months. Actually, I've been talking since about September or October of last year that I started to see inventory coming down in a problematic manner, that we were eating through inventory and we're going to end up with significant constraints on inventory like we were seeing in the second half of 2020 and all of 2021 and the first portion of 2022, and that was going to start to push prices higher. Well, what happened with inventory? 4,054 single-family resale residential homes in the Las Vegas Valley for sale. How's that compare to prior month and prior year? We're down from 4,802 or over 750 decrease in the number of houses available for sale through April from what we were in March. That's down 15.6%. This is a continuation of a strong downtrend in inventory over the past half year. We've just been seeing inventory being depleted every single month. This is up very slightly from the inventory that we had at the end of April of 2022. We're up 1.1% from 4,011 houses for sale then. Remember, people had been talking about how inventory was going up really high last year. Well, they were talking about that in the second half of the year. Inventory was going up primarily because sales were going down. And so houses that were sitting in inventory were not selling. They were piling on top of each other. So we're 1.1% higher than we were last year at this time. That's a very small increase. That suggests actually we've got a leveling of the entire inventory curve. And we're down 15.6% in 1 month. Now, normal inventory, we're at 4,054. Normal inventory is a little over 10,000. We're down 60% from normal inventory. We're not in a balanced market. This is a seller's market. It's a slower market than it had been certainly in 2021, but we're getting to that point where this is going to start to change. Now, another way to look at inventory is months worth of supply. Months of supply is if we received no new houses into the market, how long would it take us at the current sales level to deplete all of those houses that are sitting in inventory? That number at the end of April was 2.2 months. A normally functioning market is 5 to 6 months here in the Las Vegas Valley. So let's say about 5.5 months. So that's about 23 weeks worth of inventory. And we're sitting at 10 weeks worth of inventory. So clearly well less than half of normal. That's down. It's down from 2.6 months worth of inventory in March, right? So we just took 0.4 months or about 2 weeks worth of inventory out of the market this past month, even though sales had slowed a little bit. Now, there's another way to look at the month supply number. I've just given you the month supply relative to closed sales. But what happens if we look at months supply, total inventory, divided by the pending? That would actually take us down to 1.7 months. So we're sitting basically at only 2 months worth of supply here, depending on which way, sort of averaging the two ways that we can look at this number. That's getting into a level that we've seen for fewer than 15 months, going all the way back to the year 2000. So we've rarely seen inventory this low. And when we did was the full year of 2021 and a couple months on each side of that. We're sitting at a really low inventory level, and that's going to start to really impact buyers from what they have to look at the level of competition between buyers on properties that they're looking at, and consequently pricing. Now, fortunately, we get new listings into the market. So new listings are newly listed resale single family homes coming into the multiple listing service that are available for sale. When those houses come into the market, they boost inventory, right? They replace inventory that's being taken out because a listing has expired or has been withdrawn, or much more likely has actually been sold, right? Because those houses are coming out of inventory. Newly listed resale in the Las Vegas Valley for April of 2023, 2,312. Now, problematically, this is actually down. This is down 5.7 from the 2,462 newly listed that we saw in March. Now, this is problematic for a couple of reasons. One is it's just low and it's not allowing us to replace inventory that's coming out of the market. So we're going to see inventory come down even further in May. Second reason this is problematic is because the strongest new listing months of a year, every year seasonally, so there's a little bit of variation, but seasonally, March and April. In March, we had new listings come up, not a lot, but a little bit. In April, we've actually seen new listings come down. This is counter-cyclical. This is problematic because April is one of the two strongest months of the year, historically, seasonally, for new listings. Now, I had said I think that May and June are going to be creating new listings that are a bit above normal seasonal trends. Let's hope that that's actually true, because inventory here is being depleted with sales, with pending contracts and then closed sales, and it's not being replenished with the new listings because sales are going up and new listings are actually going down. So inventory is falling. Now, we are down 38.1% from the new listings that we had in April of 2022. That was 3,752. That number was kind of near normal last year. So we're down 38.1% from that. But remember, last year we started to get that inventory build really coming into effect as we started to get past April of last year. So last year we started building inventory here. This year we're digging into inventory. We're digging into a deeper hole in terms of the inventory that's there in the market. So the inventory level and the new listing level, these are among the reasons why I think that, again, assuming Congress manages to deal with the debt ceiling, that we're going to be doing really well for sales and really well for pricing through the second half of this year. If you go back and you look at my forecast video for 2023, which I issued in November of 2022, I had suggested at that time that we were going to see some real weakness in quarter one of 2023. We'd be seeing a bottom put into place in the market in the second quarter of 2023, and we'd be seeing some strong growth in the second half of 2023, barring failure to deal with the debt limit. And that's exactly what's taken place. We've actually sort of started putting in this bottom in the market in February, strengthening in March, and I think that we're consolidating here in April, and we're going to start to see a real pickup with the May numbers. Okay, two more things in this video. One is the back on market numbers. Every month I've been commenting about back on market is elevated. These are contracts that have failed. They've failed for a variety of reasons. Most of them had been appraisal reasons at one point in time. A lot of them are inspection or due diligence reasons, repair reasons. There are others with people losing funding, losing jobs. Not too many people are becoming unemployed, but they may be transferred to other locations, or they may actually lose their funding because there's been some dislocation in the banking sector. That number for April 7/23, that's actually 28.9% of contracts that were written. That's up very slightly from the 28.0% of contracts that were written in March. So we're kind of stable, close to this 30% level, but 30%'s twice the normal back on market. If we go back prior to 2020, normal back on market is sort of 10, 12, 15%. So we're running about double that. So back on market's still something you really need to pay attention to. You want to talk to your agent about how they're going to help you to make sure once you get into a contract, whether you're a buyer or a seller, that contract is actually going to be completed. It's really important. So otherwise you have a collapsed contract and you start all over. Now, the other last thing I want to talk about is affordability, because this is something that lots of people express concern about. Interestingly, over this past sort of 6 weeks, fewer people are talking about affordability. I'm not sure exactly why that issue has gone away, because it looks pretty identical to how it had looked before. If we look at the peak for housing prices in this past cycle is being May of 2022 at $480,000. And we look at a 90% loan to value loan at the average interest rate, that house required $2,391 per month to service the principal and interest on that mortgage. If we take the number that we actually achieved in April of $425,000, we've come down $55,000 from the peak, but interest rates have gone up actually by a little more than 1%, by about 1.1% over this past year. Where interest rates were going up throughout 2022, but they were about 5.33 in April of 2022, and they're about 6.4 through April of 2023. That means the median sale price, even though it's down by $55,000, at the average interest rate on a 90% loan to value loan, takes $2,372 a month to service the principal and interest. That is $19 less per month than what we were seeing in May of last year. So I make this comment about affordability both to highlight that we're not really changing, even with the higher interest rates, the level of affordability that we have in the market right now. And we actually see that buyers are accommodating these higher interest rates at sales volumes that are looking pretty decent. Remember, March really strong, April strong, but not quite as. But we've got all of these pending contracts. Well, people write the contract, they're looking at the interest rate when the buyer makes the offer, and they write the contract, right? So the interest rate at the time the contract is written is what's really consequential to a buyer, not so much the interest rate at the time of closing. In fact, because people lock their loan at the interest rate on their loan once they've gone into contract within a couple days thereof, that means that if interest rates were to go higher while they're in contract, that doesn't change the interest rate that they're actually going to pay on the mortgage. If interest rates came down, not going to change the interest rate they would pay on their mortgage. So that's that. That's the market update for May of 2023, which is the data for April of 2023. I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes, whether those are primary homes or investment homes. We help people build wealth through real estate. If you think we could be effective for you, please reach out to us, talk to us, and see what we can do for you, whether you're buying or selling here in the Las Vegas Valley. I look forward to seeing you in the next video. Thank you.